Hey everyone, welcome back to another optimal trade entry video. This is volume number 4 or episode 4. We are looking at the British pound US dollar GBPUSD, and for this series, remember we are focusing on New York optimal trade entry. So I have my annotations off and I'll go ahead and turn them on in a second, but tell me what you guys see. Annotations are on. 5-minute chart. We are looking at a bullish scenario. So we have a GBPUSD buy in the New York optimal trade entry time window. So remember, our time window is from 8:30 a.m. to 11 a.m. New York time. We are trending higher all throughout London lunch, and then New York kill zone starts 7 a.m. We get a strong impulse move higher. We start kind of getting this swing high consolidation. We get a retracement into our, what is this? Our New York optimal trade entry, 8:30 a.m. Also, the PPI news release, high impact news release for Tuesday's November 15 trading was in our favor. So when price retraces into our fair value gap order block combo, that's our entry pattern right here. Order block coupled with fair value gap at optimal trade entry. Now we get this entry a little bit early, but that's fine. We are looking at the framework. So we have resting buy side liquidity, and we are anticipating a run on the buy side. We are anticipating a run into a daily fair value gap. So when we get this retracement down into this OTE, we are expecting the news release to go in our favor, and we are expecting an explosive move higher into the daily fair value gap. So if we anchor our fib from this candle's low up to this candle's high, we extend that out, we get a perfect 62% retracement delivery. Again, a little early, but price doesn't actually start moving until 8:30 a.m. That's our time window for these setups. So price gives us a strong impulse move higher, completely fills in this daily fair value gap, and then we retrace that move. But that's not important. What we were focusing on was that nesting buy side liquidity. So I'll go ahead and zoom out here in a second. We'll be looking at the daily chart, but as we can see, price is trending higher. New York kill zone starts. We get a strong impulse move higher. We are expecting a retracement. Why? Because price left a fair value gap. We wouldn't use this fair value gap up here from this candle's high to this candle's low. Why? Because this is not the high probability fair value gap. We want our fair value gaps preferably to be coupled with either a breaker or an order block. So this is our order block. This is our fair value gap. This is at an OTE at OTE. That's our entry pattern for this model, and price trades higher. So I'll go ahead and zoom out daily chart. This is that daily candle here. We had resting buy side liquidity here. This candle's high, this candle's low. This is our imbalance, our fair value gap. We are expecting price to trade up into that. Our supporting DXY supporting our idea for a bullish British pound US dollar scenario. So this is the move here, and we retrace that move. But we were targeting our daily buy side liquidity. So remember, we are always focusing on the higher time frame. Even though our executions might be on the M5 or the M15, our draws on liquidity, our higher time frame targets will always be based on, again, the higher time frame. So again, strong impulse move up starting in the New York kill zone, retracement, optimal trade entry, 8:30 a.m. New York time. Also news release, PPI, high impact news, fair value gap coupled with bullish order block, perfect 62% retracement delivery, and we get a perfect two standard deviations, almost 2 standard deviations, but we completely fill in and then we retrace the move. So like and subscribe. I'll see you guys in the next one.